All right. Hey there, everybody. Welcome to our second pool party here at Centrifuge. We kicked off the pool party concept a couple months ago with one of the other pool operators, Database Finance. But today we're really excited to have the team from REIF here to share a bit about their business. And after their presentation, we'll be taking questions both in the chat or feel free to speak up. I'll keep this pretty brief. Just want to turn it over to the team. I can see Ben, Michael, you're here. Maybe if you guys want to kick it off with a brief introduction and then dive into your presentation from there.
Yeah, for sure. Thanks, Mike. Sounds good. I do have a slide with some more of about us on it, so we'll get to that. But I'm happy to kind of just tee it up, and then I'll intro to Michael Karpenko on our side for a quick intro. But yeah, thanks for hosting, and look forward to kind of chatting and yeah, any questions about anything, feel free to let us know. And as mentioned, my name's Ben Ames. I have been kind of primarily in real estate for majority of my career. Started out kind of right out of school, basically started a kind of flipping business, for lack of a better word, in a kind of a tertiary market to Toronto up here in Canada, and was really kind of benefited from kind of the right place and the right time, and kind of the right team to really ride the wave of appreciation that we've had over the last kind of 10 years or so, and especially in the market that we were in, being Hamilton, Ontario. But we really got really good at essentially kind of using leverage to kind of grow kind of a specific size of asset class. Like started out with kind of duplexes, triplexes, that kind of thing, and then we acquired a kind of enough of a portfolio, and then sold it all to buy kind of the next step up, and then use leverage from there to acquire more, and then kind of did the same thing, basically to get to where it is today, which is kind of about 350 million in assets under management. Probably 75% of the portfolio is industrial, with a couple of other kind of odd commercial offshoots. We do have some residential left, but not as much. And yeah, in that role, I was kind of primary lead on acquisitions, dispositions, as well as asset management for kind of half the portfolio. And so definitely learned a lot in kind of the 6 to 7 years of kind of management there. And then kind of a couple of years back, I went to school with kind of founder of a company called Coral, who you might be familiar with based on the Fortuna 5 pool. And Derek Manouche there, we went to University of Guelph together, lived together for all 4 years, kind of still remain friends. And just one of those people that as soon as you met him, he's just the smartest person you've ever met. And so I've been kind of riding his coattails ever since, really. And so when he was explaining more about how kind of Coral functions and providing kind of growth capital to digitally enabled companies, I figured it would be a great opportunity for me to kind of go and help him launch the company and start deploying capital on that side, and really work the other kind of side of my investment brain. And so helped to kind of launch that initial Fortuna 5 pool while still doing kind of a lot of kind of real estate management with the old firm that I co-own. And basically the culmination of all that led us to forming REIF, where we kind of merge what my experience really on the kind of the real world asset side, and then bring in kind of create a new fund that we can bring on chain and connect that digital capital. And so that's kind of a bit about me. I'll leave it there and let Michael Karpenko, if you're on the call, just to introduce himself as well.
Great. Yeah. Thanks, Ben. So just a quick introduction. So I'm working on kind of business development at the REIF pool right now, meeting with investors, helping with structuring and kind of figuring out how we're going to grow. I most recently was with Purpose Investments in asset manager in downtown Toronto. I was kind of first 20 employees there for, I was with them for about 5 years, and we grew the firm from about 1 to 12 billion in assets under management. Most recently launching the first kind of Bitcoin and Ethereum ETFs early last year in the Canadian market on the TSX. So that's a little bit about me, but feel free to take it back, Ben.
Awesome. Thanks, Mike. So kind of, I guess, good place to start here, kind of based on our kind of idea for bringing what is essentially just kind of your standard real estate debt fund, but bringing it on chain, and we're still kind of verifying, but we think that kind of the first 2 commercial mortgages that we have executed were the first commercial mortgages on chain ever, which is pretty cool. But I'll get into that in a little bit as well. So just a kind of a high level overview for people that might not kind of know exactly what a real estate debt fund is. Basically, we are we kind of raise capital ourselves, usually as a kind of a debt or some kind of line of credit instrument. And then we use that capital to loan to mid-market property and asset managers, primarily in kind of the Hamilton area. We do have one asset originator that we're starting with, which is the group that I was involved in. And so I understand the portfolio really well and just kind of keep the risk down initially. But we do have a number of other asset originators that are interested in the capital and can kind of scale through that way. But we'll primarily be kind of commercial real estate assets in Southern Ontario to start. The good thing about real estate is that it's kind of such a big industry in terms of asset value that we can kind of really be niche and focus on a kind of specific asset class and a specific market that we know really well, but still have kind of outside scale when compared to kind of other investment niches. But so that's kind of generally the high level business. The kind of the unique part of this debt fund is how it ties in with the kind of the Centrifuge program, where we're converting these debt assets into NFTs, and then there's lots of kind of unique opportunity to kind of pool those pool those assets and fractionalize those assets, which we can sell in units and provide basically a yield-bearing instrument that has like kind of institutional quality security. And so that's the game plan really on our end, and kind of what we're executing on. The opportunity I won't get into quite as much because we're all hopefully familiar with the DeFi space and are all fans and recognize the opportunity. But certainly on our side, we're proponents of decentralized finance and definitely in real estate being kind of a legacy industry. There's lots of intermediaries and lots of kind of central management that can be eliminated in a more decentralized space for kind of more opportunity, as well as more access and more kind of fractionalized ownership for your average retail investor. And so this is something that we're passionate about on our side, and definitely want to be leaders in that space, and certainly when it comes to real estate or to royalties on the coral side. On our end, so our expectations, and just kind of to get into a little bit in terms of our growth, basically in our kind of minds, we have a lot of we have a great opportunity really to bring kind of that real world type structure into the DeFi space. And so we have lots of relationships with kind of larger real estate debt financiers, as well as kind of just capital providers and asset managers that are interested in the space, but just don't really have a way to bridge that gap. And that's where we can really capitalize on a tremendous opportunity here by just basically bringing that kind of real world capital into the DeFi space. And so, as I'd mentioned, like, we were facilitating the issuance of commercial real estate loans to mid-market private real estate investment managers in North America. When I say a mid-market investment manager, I mean generally like anywhere from like 80 million to kind of 300 million plus, maybe 400 million in assets under management. We're not focusing on like REITs or other larger institutions at this time. It's more that kind of middle market, which is really underserved right now. So management team, we've kind of got 15-year history of loan management, over $350 million CAD portfolio, as I had mentioned, kind of through my last company. And we've got relationships with other asset originators in the area that kind of total over $1.5 billion in AUM. So it just kind of makes nods again to the size and the scale of real estate and the opportunity really here that we have. And so on our side, we have onboarded that first asset originator. As I'd mentioned, the company is called Forge & Foster Investment Management, of which I'm kind of a small minority owner, but helped grow and start the firm. So I have a very deep understanding of the portfolio and of the execution plan and strategy. And so that's where we can be very conservative and safe in our first initial investments with the group, because I know the portfolio quite well. But as we scale in terms of the pool size, obviously we're going to want diversification in the pool. And that's where other relationships with asset originators in the area on my end will come in. As a few groups mentioned here, there's a group called Core Urban, mostly in Hamilton, but doing a lot of very unique and interesting kind of adaptive reuse projects in downtown Hamilton. Really great firm, as well as Mallium Property Management, who do kind of mostly residential, but they do have some commercial retail stuff. But the kind of the residential focus would be a good diversification in the early days for us, as the majority of Forge & Foster and Core Urban assets are more commercial. And then this is the team for now. We're kind of a smaller team, but definitely a lot of experience in the space, and kind of get into kind of the specifics of each person. But there's myself, as mentioned, kind of 10 years in real estate asset management, over 150 million in acquisitions and dispositions in the career so far. And we grew assets under management from about 15 million to the 350 million where we are today, in a kind of a very relatively short time frame. Yuval Bavli is our Chief Risk Officer. He's a commercial banking loan officer for 6+ years. He worked at TD Canada Trust as one of their commercial loan officers. Lots of history in lending, and definitely lots of experience in managing risk across real estate assets. Michael, who introduced himself already, so I won't get into it too much, but certainly the kind of extensive financial analysis and business development experience for public investment funds, with his experience in the Bitcoin ETF and the Ethereum ETF. And so we're lucky to have him on the team. And finally, Vincel Hoberg, who is kind of a senior role for us, one who has just a tremendous amount of experience, both in real estate management as well as real estate loan management, managing like AUM into the billions of dollars. He worked for Canada Pension Plan Investment Board, as basically a kind of a large publicly traded entity. He managed kind of real estate division for them, as well as his own company, which he grew and then sold kind of a few years back now. So we're very lucky to have him and his experience as well on the team. Talk a bit about our plan. Obviously we're kind of a couple of months in now, so we can talk about kind of where we're at specifically today, and then what the next couple of months look like. But we launched the pool in January of 2022 with a 5 million seed from us. We did receive a kind of 2.5 million investment from Rockaway Blockchain Fund. So they're kind of the largest third-party investor at this time. And then the plan for us was basically to onboard that real world capital, as I had mentioned, really on kind of a rolling monthly basis. And so our plan was 5 to 6 million Canadian per month. February has had some kind of delays in closing, but we do have 4 million CAD that is going to close this week. And so you'll see that growth in the pool, which we're excited about. We definitely have a couple of opportunities for loans that we've underwritten and are very excited about. There's a kind of a couple companies that I can't name right now until it's done, but very kind of well recognizable tech companies that are moving into Hamilton that obviously very excited to kind of work with and help provide the capital to build their spaces essentially. So I'll talk a little bit more about kind of the specific products in a later slide in terms of kind of how the capital works. And so that's our plan. March is on track. We'll close March. March is 5 to 6 million in probably 2 to 3 weeks, and then kind of can continue building off of that with other kind of DeFi capital and real estate capital as well. And basically all this is kind of culminating for 2022 is kind of the building, the growth, and then for 2023 and beyond, we want to get into the kind of the 150 million to 300 million in terms of originations, and kind of be a kind of a primary mid-market loan option for kind of southern Ontario, and then scale from there. So that's kind of the game plan, and certainly kind of executing on it in our first couple of months after launch. This kind of talks again like what I had mentioned. So for 2023, we're expecting kind of 150 million in terms of loan deployment, and then scaling from there. Generally in this space, kind of debt fund management, if you can break past the kind of 300 million to kind of 500 million space, that's when you get access to, and you have a history of kind of successful loan origination. That's when you get access to kind of the larger kind of pension capital. And obviously a goal of ours is to bring in that kind of larger capital group into the DeFi space, and then really kind of blow this debt fund up to kind of more of an institutional kind of grade fund, and then probably have a couple of pools. It'll be like a kind of a core fund, as well as a growth fund where we might kind of get a little bit more yield off of it. But I'll talk about the specifics of the products in a later stage. So this is kind of a bit more about our first asset originator, Forge and Foster, as I had mentioned. It's about 350 million in AUM. They're kind of committed to 250 million in debt financing across the current portfolio of assets, with about 100 million a year in new acquisition financing on a go-forward basis. And so we like the real estate mix. We like the execution of the group, and we see kind of a real opportunity to provide a good product to this type of asset originator. This next slide talks a bit about that history. So this is the group as basically in like 2016, 2017, the firm professionalized the kind of the entity that is kind of the investment management firm, and started offering to kind of friends and family and kind of building of a little family office. And so that's where these first properties start from. There is more history. There's a more kind of larger track record of smaller properties and kind of more as we were entrepreneurs, just kind of scrapping deals together. But this is kind of from the beginning of when the firm was kind of officially investment management entity and offered real estate investments to our friends and family and accredited investors. And so as you can see here, the IRRs are all done on an equity basis. These aren't done on a debt basis, but the execution of the group is stellar, with the kind of average expected IRR of 33% across the portfolio, which is incredible. So kind of a good kind of realized equity track record for the company. This is the unrealized equity. So these are the assets that are currently they're still currently managing. As you can see, the IRR has come down a couple of points, but still quite an excellent kind of average expected rate of return at that 26% number, and the multiples are still quite good, and being kind of over that 2x multiple, usually over a 4-year term. So all of that kind of made us confident in terms of kind of who the asset originator is and what kind of projects we do want to finance in the beginning. We were very specific with our first 2 loan offerings. We definitely kind of earmarked a specific district that Forge and Foster owns as one that we wanted to be involved in. The area is called the Annex, and it's called that for a kind of for a specific purpose. I'm just going to play this video just to show you kind of generally the area. Oh, full screen is unavailable, so I'll have to just kind of peer at it. But I'm just going to kind of make highlight of kind of the specific area here. And so this area is about 21 acres of a kind of downtown, we call it like a flex industrial type product, which kind of in its original state looks like this before picture, where it's a big open space. It's not the nicest. It definitely needs some work, but the ability to sell it to a tenant as like a logistics or a kind of a funky office space at a future use, or a kind of a wide range of potential uses is really where we see the market going today. There's lots of companies looking for that kind of anything from like logistical to kind of more brick and beam type space for a higher end use. And so this building has the kind of assembly of buildings have great bones to be able to provide those types of uses and those types of spaces for tenants. And this area also has another unique factor in that being its proximity to downtown Hamilton, which I'll show you. This highway in the background here is the 403, which kind of cuts right beside downtown Hamilton and is basically the feeder to Toronto and the feeder out west to Brantford. There's an off ramp here that goes right downtown Hamilton, and so to be able to get right to the highway and then right to downtown is very valuable for tenants looking for this kind of space. And so the location's excellent. The other thing furthering the location is the kind of surrounding investment. This large building in the background is the old Hamilton Spectator building, which is the old local newspaper building. It was sold 2 years back to the university, the McMaster University, who are investing in an innovation park in the area. So kind of multi-billion-dollar investment, both in this building as well as in the area kind of to the south of the park, on the kind of on the other side, I'll be able to see a good view here. So in this area in the background, as well as this kind of large building. And so really kind of the assembly here is surrounding that kind of multi-billion-dollar investment into medical quality lab space. McMaster University has a large healthcare program, and they are investing quite a bit of money into developing spaces for their graduate programs and their students to be able to start companies in the healthcare space and grow into this innovation district through the lab space development and other kind of healthcare type uses. And so the thesis originally with Forge and Foster, which we agree with, was basically to assemble this type of creative product around that investment, and then be able to offer that to like subsidiary or like secondary type uses that want to complement the healthcare or be close to that healthcare development. And the thesis has proved accurate in its initial stages by way of the tenant build out and the tenant demand that has come in. And this one for us, this first product offering that we did was basically to service kind of two tenants that were kind of either new to the space or were in existing spaces and were wanting to expand. And so the first tenant here is Gateway Neurophysio. They're she's basically a physiotherapist, had another clinic that she'd kind of outgrown, but her specialty is focusing on elderly and dealing with kind of neurological issues and providing physio options for those types of neurological issues. So her space requires like a gym, it requires a small office space, requires these kind of patient rooms. It's a very kind of unique setup, and one that she was having a trouble finding a space. Essentially, there's not too many spaces that can provide all those options in one, and that's where the flexibility of these types of units come in. And so this is actually that kind of Gateway Neurophysio unit in a before condition. It used to be like a sign manufacturer that was in there, but I'll show you in a later slide kind of what it looks like now after our capital provided the construction financing to build out the tenant. The other tenant that's coming in is an existing tenant. The tenant's called Mabel's Labels. They're a children's children's sticker and label manufacturer. But that company was bought by its parent company, CCL Industries, which is a kind of publicly traded US entity. So obviously a great credit. And they're expanding their existing space at 150 Chatham to around roughly 16,000 square feet. So our capital is being used to build out kind of both those spaces. So this is the after. So obviously quite a big difference, more lighting, more kind of glass garage doors, more windows, more natural light coming into the space. Part of the construction build out included just kind of upgrades to the floor, upgrades to some of the mechanical infrastructure, but the underwriting coming from the asset originator that we vetted was at about kind of $50 a square foot in terms of a renovation budget. And that's kind of this is basically what it looks like now today. She I think just occupied the space last week, and so that's kind of the neurophysio type build out. The other space, Mabel's Labels, they haven't started construction on it just yet. There's a kind of pretty significant mechanical engineering fit out required to be able to obtain permit drawings, of which I have been submitted, but we haven't received feedback yet from the city. So the renovation has not started on that unit just yet. But obviously quite a significant transformation, and now a kind of very kind of creative and future space here that this tenant can enjoy. So that was our first offering. The second offering was also in the park, is at 70 Bridge Street in Hamilton. It's kind of a bigger loan, which impacted kind of 4 spaces. Again, it's kind of a similar kind of before picture, kind of just good bones, but really needs just some kind of infrastructure upgrades as well as cosmetic and just kind of more kind of a professionalized look to be able to get these kinds of tenants. And so there were 4 tenants here. 2 of them are new. 2 of them are expansions. Sorry, I should say 3. Alchemy Fitness was a tenant at another location, but they're moving to this 70 Frid location. Direct Traffic is an expansion of existing space. And then a jiu-jitsu group and a brewery are new tenants as well. And so totaling a large square footage here with the kind of at new rents to be able to service the mortgage, as well as kind of more stability for kind of the vacancy that was on site. And so this is the before pictures, nice kind of brick and beam type space. And this was a kind of a more recent loan, and so the construction is ongoing right now. But you can kind of see the end result. And so there's kind of new windows up here, new windows will come in, kind of bring in kind of more lighting and more natural light into the space. There's kind of a bathroom build out happening here. And then this is kind of the completed exterior work for one of the spaces here at 70 Frid. And so this landlord's very keen on kind of well designed and definitely good curb appeal to their buildings. It helps with lease up, as well as just kind of the maintaining the quality of tenants and the standards of the buildings. And so, as you can see here by this this kind of exterior photo, nice new glass garage doors, new paint, roof was redone, and a couple murals here to just kind of give it a little bit more funk. And so, so these construction projects are underway. We're happy with the progression of the construction, and we're getting regular feedback and updates on how it's going. But will be a similar kind of end quality as the other spaces that had shown in the first mortgage. So, and that was my presentation.
Thanks for that, Ben. Got a comment in the chat asking, would you be able to share this via email, or could we post this to the Centrifuge governance forum?
Yeah, for sure. I just have to check in in terms of the sharing of the return summaries for Forge and Foster, but it might be simple enough to just kind of remove that page, and then we can share those details, definitely.
Sure. Yeah, really exciting to see that neuro physio facility build out and being funded essentially by DeFi capital. Really cool to see.
Yeah, it's awesome.
So I didn't see any questions pop up in the chat yet. If anyone has any, feel free to unmute yourself and ask Ben or Michael directly. You can also just post them in the chat if you'd like, and I will read them out.
Hey, can I jump in?
Yeah, go for it, Justin.
Hey, yeah, thanks for that, Ben. Enjoyed the presentation. Yeah, my question to you was, I guess I've got 2 questions. The first is, what proportion of the capital that's coming on chain to fund this do you envisage being institutional capital, and how much do you envisage being kind of retail investors? And then my kind of second question on that is, of the proportion of institutional capital that you anticipate coming on chain, why do you, like, what's the real reason that some of these institutions that you're talking to want to bring that capital on chain? Like, why don't they just want to fund these organizations in the typical way they do at the moment? Like, but basically, what's the value proposition to them of funding this on chain via Centrifuge as opposed to going directly into one of your groups?
Yeah, for sure. It's a good question. So definitely like institutional grade capital will take some time for us to to get onboarded. Like they're going to want to see probably like kind of 1 or 2 year history of returns through the pool prior to issuing funding. So definitely in the first kind of 12 to 24 months, we'll be going to either kind of retail or those kind of like mid-market type funders. And then generally, I guess to answer your second question and partly the first question is really the value add or the value opportunity that we provide is really, it's on the debt fund side. It's not the institutional grade quality. They're just probably they're not ready, or they're not kind of able to understand bringing things on chain. I'm sure eventually that once we'll have to educate them on it, they'll see the value in the transparency and understanding kind of the units and the opportunity that comes from that kind of fractionalization. But definitely in the early stages, they're just going to want to see a history of return and ensure that their capital is secure. And so that's kind of the route that we'll start with. The reason that they pick us is, I mean, it's basically kind of the type of capital. So there are always kind of bigger fish in the sea, you know, and these kind of types of groups have large amounts of capital that they're looking to deploy. And so they're looking for kind of the asset, like kind of the groups like us to be able to deploy kind of a smaller portion of their total portfolio summary in a more effective manner than them having to scale to be able to underwrite all of these individual deals across kind of a different variety of funds. And so we'll be looking for like funds of funds, basically funders of funds. And there are those kind of groups that exist today, and in the kind of the less institutional quality in terms of historical performance. And so those are the kind of groups that we'll be chatting with first to bring on that kind of capital where they're maybe okay with a little more risk in terms of historical returns in exchange for kind of maybe a little bit higher yield.
Yeah, I guess I'd also just jump in there and just highlight, you know, how unique this offering is in the whole DeFi community. There's nowhere else where you can really go right now and get direct access to commercial real estate improvement projects like Ben just walked you through, and where you can do it through a reliable and trusted platform like Centrifuge while earning community rewards. But it's very unique. It's significantly more secure and concrete than a lot of the other structures that are floating around in the DeFi world. And I think there's a lot of DeFi investors internationally who would benefit by diversifying their portfolio and by putting some of their eggs into a basket that is connected to more traditional financial assets that you know, a lot of people can actually sink their teeth into and understand. We're building out real buildings here, and we're creating value in a community that's really tangible. So that's just a unique proposition right now for the whole community. So that's one side of it for the DeFi investors.
Yeah, nice. So I guess just follow up on that is that so basically, yeah, it's like we're still maybe 1 or 2 years away from kind of institutions coming into your pool at scale, right? Is that kind of right? So I guess it's going to start mostly with retail investors. And I'm wondering what's like your strategy to like really hustle for that capital at the moment. So I'm just looking at Tin Lake now. So you're kind of competing with New Silver, I guess, who've got like 25 million, which is like a good number. But like, you know, you're going to be out competing with them. Like, you know, what's your strategy to kind of make this all a competitive space, and like the two of you ultimately bring more and more retail investors to this platform and really like drive traffic to it and really scale and get, you know, way beyond 25 million to get to, you know, 250 million within the next year or so?
Yeah, I'll start this off and then flip over to you, Ben. I guess like one thing I would highlight is, you know, I don't really see us and New Silver as competitors for money. I see the whole Centrifuge platform as a competitor for capital in this massive ecosystem of capital that's already exists. So the question really isn't, how do we beat new silver? The question is, how does Centrifuge and DeFi investors attract more of the massive multi-trillion-dollar pool of investor capital that's already out there in the world, and the trillions of dollars that are already invested into real estate? And that question comes down to the fundamentals of DeFi. Why is transparency better than the current opaque system of, maybe a friend of a friend who knows a guy who flips houses in your community, and you'll get mailed some statement once every 3 to 6 months to get an update on your portfolio. I think there's a lot of people around the world who would prefer to go through a DeFi transparent community where we can post our assets onto a blockchain that can get verified in real time and see the underlying structures. So winning capital in the long term is about bringing the existing capital that's doing this today over to this current new system. It's not so much us beating our neighbor outside. But Ben, I'm sure you have some stuff to add.
No, that's great. I think, good summary. I think just kind of like execution right now on our end is we're fortunate to have kind of the experience that I've had in terms of we basically built like a little family office at Forge and Foster. But Forge and Foster only offers equity investment, and their retail group there is very keen on a yield bearing instrument. And so that's where like day one, where our first kind of like that 5 million a month onboarded is that's where that's coming from really, is that existing investor network that I have relationships with that are interested in that yield bearing instrument. And so that's really step one. And then step two, as Michael had kind of mentioned there, is that bringing in kind of more of those kind of larger real world groups that are already existing in the real estate space today, and just giving them another option with kind of that more transparency and that more fluidity is a good conversation. And then I also just want to clarify too, when I say institutional, like to me in Canada, like institutional means like Bank of Canada, like RBC, like the top 5 big banks, like those take time, and you just have to have a large historical track record to be able to secure those types of financings. But there's lots of groups and lots of fund of funds that fund that kind of mid-market type group that maybe doesn't have the experience or the historical track record to be able to get that institution quality. And so that's where there's kind of bigger upside in terms of scaling the pool quicker, because we can chat with those groups that could do the kind of 10 to 25, $50 million type investments. So.
Great, thanks guys. Renee, I saw that you took yourself off mute. Did you have a question?
No. I fell through, my iPad died, so I got back into the phone. Sorry. Very interesting.
Yeah, no worries at all.
Thank you.
Yeah, if anyone else has other questions, those were great, Justin. I think that was a good discussion about how the REIF team's looking at different capital sources. Don't want to speak for you guys, but I might also add that REIF, now that the pool is up and running, is kind of going through the maker governance process, and will soon be entering our Aave real world asset market governance process as well. So there's a diversified source of capital on the DeFi protocol side as well. Yeah, I don't know if others have questions, or maybe if Ben and or Michael, you'd be willing to share your contact information so that people could reach out after the fact with other questions, or if they're interested in investing in the pool. But yeah, if anyone else does have any others, feel free to speak up now or post them. Otherwise, yeah, go ahead.
Ben, I took your email from the presentation, bames@reef.finance. Is that a good place to reach you?
Yep. Yeah, that works. Yeah, definitely. I mean, I'll sync up with Michael S. and just give him kind of more information in terms of our contact details as well as this presentation, and so that'll come out there. But definitely that's a good email to reach out to me at.
All right, I'll send you an email. I want to ask you something a little bit off topic of this.
Sure.
All righty. Unless anyone else wants to jump in with another last minute question here. Just wanted to thank the REIF team for the presentation and walking us all through your business. Looks like one came in here. Have Canadian media expressed any interest in your enterprise? Have they picked up the story yet? Ben, I don't know if you want to answer that.
Sure, they haven't yet. Kind of partly on us, I think. I think we're still kind of verifying to make sure that we're the first commercial mortgage on chain officially before announcing it to the masses. But definitely we have with quite a few PR releases upcoming and planned for the next month or so. And so definitely a kind of a big strategy for us right now is to get involved in a few different publications that are pretty relevant in the Canadian real estate space. So
yeah, thanks for that. As we mentioned, or Ben and Michael covered in the presentation, the pool is relatively new. But yeah, doing events like this, the pool party, Centrifuge, and partnership with REIF are just trying to get the word out and answer questions and provide transparency about the pool and how the team at REIF operates. So yeah, we'll share the recording of this in the forum, as well as I'll coordinate with you, Ben, to share contact information if anyone wants to follow up. But again, thank you guys for the presentation, and thank you all for joining and your questions. Hopefully this has been a great overview of REIF, and we hope to see you at the next pool party.
All right.
awesome. Thanks, everybody.
Thanks. Bye-bye.
Thanks, everyone. Bye.